Hello. Hi, good evening, everyone. Thank you for joining us on this Market Outlook series. I'm Ray Hong, BD at ProsperUS. So let me introduce our speaker for today. Covering the session tonight, we have Wei Ren, market strategist at ProsperUS, with over 12 years of experience in the financial industry, specializing in technical analysis and macroeconomics. As most of you are aware, ProsperUS is a digital investment service catered for the digital native. We create educational series so that you'll be able to learn how to invest from the professionals. You can also check us out on our ProsperUS app on the Google Play and App Stores today. And do follow us on our social medias as well for bite-sized educational content. So without further ado, let's start the session. Raymond, over to you.
Hong, and thank you to the ProsperUS team. I think this is the second time I'm doing, so let me just share my screen before I carry on. So I need most of your help to see if I'm sharing the correct screen and you can hear me loud and clear or not. All right, so just do a bit of interactive. So if you can hear me loud and clear and see my slides, the correct slides, please type in 1. Or if you can't hear or no sound from your side, type 2. So before I start, we can actually look at what's going on actually. All right, so just give a few minutes to all of you, and so you can see one. Okay, let me see. Angela, thanks all for this message. Since that most of you are able to see my screen and hear me loud and clear, so without further ado, I will start out the second market outlook that we have with ProsperUS. So the title is "In Time of Turbulence." I think after 9th of Feb, we saw the whole month of February that the Hong Kong market actually has a very strong down correction in the downside again. All right, so we are seeing also in the US that despite after a very strong rally in the month of Jan, February is actually we're seeing some sort of correction right now, and seems that the correction rally is going to carry on to the March period. So we're going to explore the charts and some of the macro charts that we have all over here. So also, first of all, just type in the Q&A. I'm going to make this very interactive, so you guys get to ask me any questions on the Q&A chat. Anything related to the market itself. I just type in the chat and then type in the Q&A box provided. For those who are streaming or watching on Facebook, type in the comment section, and then my colleague here, the ProsperUS team, will actually put up the questions flag up to me. All right, so was a bit distorted, speech also not audible. Okay, so just one more time, who can hear me loud and clear? Hi team, can you all hear me clearly on this? If not, I'm so sorry. Yeah, just type in the chat if you can say you can hear me loud and clear. Thanks a lot. Okay, all right, so I try my best, Mr. Yong, so I try my best on speaking clearly on this. All right, so just make it very interactive. Donald, thank you. So yeah, so before I go on, need to do some disclaimer. So this disclaimer is whatever I shared on today is solely for reference purposes, and is and all the opinions I shared are just based on my own personal opinions. For any financial advice, please seek your financial advisor, a licensed one, of course. And should you incur any loss after hearing our presentation, please do note that you cannot hold us accountability and for any responsibility on that. All right, so this is a very short disclaimer. So going through the thing, so I'm going to go down on the top down view of the market. So we are going to see the overview of the global macro environment from all the way from US, Europe, and the Asia. But I'll start from Asia first, and then followed by Europe, and then the US, the most important one. All right. So next one, sorry, excuse me. Then I'll after that do have some stock picks on hand. But if you guys want to ask anything related, just post in the Q&A, and then we'll just tonight. All right. So the presentation will be short, but not because I just want to keep it short, but I just want to allocate more time for Q&A and yeah, to answer some of the burning questions. And also I don't want to bore you all out with the technical details and stuff like this. All right. So macro environment, I think key themes in the first quarter of 2023, I think will be the first thing, the reopening of China, Hong Kong and the Chinese economy. So for China yesterday, latest news, you do not need to do PCR test. You just need to, I think ART test is sufficient. And then even if you do a PCR test, you just need to submit a doctor claim from your home country, and then you can just enter China. All right, for Hong Kong, I think it just has, yesterday he has announced that he will do away with the mask mandate after 945 days, the longest around the world. All right. I think the next key thing is inflation. So inflation has been a backdrop for this current global economic situation. So first, we saw a lot. The inflation has really peaked above the 2% Fed fund target expectation. The inflation, like what I mentioned last week, is due to some backlog, and the backlog is not clearing up at the moment. So for this, I think going to 2023, end of 2023 to the next year, 2024, there's one thing I'm very concerned is about food shortages and stuff. So why is this so? Because we see extreme weather, and we see, if we're going to look at the futures, the food futures like corn, wheat, prices has been pricing at a high. All right. So these are the key concerns on this. And one more thing is the Ukrainian conflict. We are entering the 1-year anniversary. That's fast. And when we what are we going to see on this? Really, is Russia going to press on to this? So it's really an unknown factor. I think like what I explained 2 weeks ago, the last previous webinar, that the Tesla's Elon Musk project is actually has play an important role in keeping Ukraine stay in the battle against Russia. Given Russian military capability, I think that Russia has the capability to annex Ukraine in 3 months, but because of the Starlink project, I think it just caused a very, very strong signal on this. All right, so the last one is coming on this weekend. Is the 2 sessions by the Chinese Communist Party. In Chinese, it's called 两会. So this 两会 is so important is because the session, the party congress, is actually just introducing a lineup. The 两会 is just to cement official takeover of the post. So means Li Keqiang will be our job after these 2 sessions going forward on this. So this unknown factor. So will Xi Jinping cabinet face uncertainty? Will someone challenge him or not? That is the key question. I know some of you think that his power is quite cemented on this, but I think that rumor is thinking that his power may be threatened on this. All right. Okay, so just moving on to the first Asia Pacific, excluding Japan. So I think March will be a very good month for the Chinese market. All right. So yesterday, I think the 1st of March, which was 2 days ago, I think, or yesterday, sorry, we saw a very strong rally on the Hang Seng market. So yesterday, the HSI actually edged up 300 points, and as well as the CSI 300. The chart later, I'll provide a chart later on to see how is it going to be like. All right. So the thing that that push the economy forward for the Hong Kong government is the ending of the mask mandate, signaling the design. And then next one, due to the ending of the mask and opening up further. And recently, I think Cathay Pacific is issuing free passes, free airline tickets. I think 250,000 of them. And these are the fact that that will twice in the economic activity. And then as such, I think we are likely to see a very strong surge in the economic activity in March itself. I think it will carry on to April, because April the weather is perfect for travel, especially in the southern part of China. All right. The next one is March also a part of important event, which I mentioned earlier on, where the two sessions is being reviewed and then confirm the top job position. Whether will there be any ad hoc opposition? It is kind of unknown right now. And then next one is Xi Jinping position will be closely watched. And after China has announced its opening up, I think the Politburo will likely will set higher growth target for Chinese GDP in the two sessions. So this one is closely look for the final details in this two sessions, and then we are likely to see what are the things we can look out for. So next one, on the next slide, so this talk about the Chinese M2 money, the inflation pressure, and the PBOC rate target. So it is opposite from the world, like what I mentioned last week on this, is that the M2 money flow and interest rate, we saw this very strong increase, especially in the month of February. We saw a sharp increase in the M2 again. That's why specifically I circled it. We saw the acceleration of the M2 money by the PBOC very strongly, and this signal a desire to curb to flow, the M2 money flow, and to what you call it, to have a very strong economic sense on that. So first up, I think inflation, we see some slight peak above the 2%. It's likely go to 2 to 3% on this as well. So the low interest rate actually fuel much more capital borrowing demand. This one is going to cause a problem. I have a slide later on to describe what are the problems going ahead on this, but it's not, if this persists, I think it's not really a very good sign as well. All right, so the next one is the China PMI. So the PMI actually rose to the highest. I think this was news yesterday. So for the last 11 years, we saw a very strong surge in the PMI. For the non-manufacturing PMI, we saw the growth wasn't that huge, but it beat the media consensus on this. But if you look at the manufacturing PMI, actually we saw a very huge jump on this compared to just 1 point. This one we are seeing like 2.6 point of jump on this, especially on December, all the way on the upside. Meaning to say that the manufacturing sector has picked up a lot of activity after the COVID lockdown. That was happening last year since September onwards, going forward on this. Okay, so the China. Okay, so this is what I mentioned, that due to the influx of M2 money and low interest rate, people are starting borrowing. So first thing first, we are on this borrowing cost, and is the first thing we get in mind is the property market. So for the property market, we saw a very strong, since the Evergrande saga, that it has collapsed, and then you have Chinese private property companies that have this unbuilt uh, houses. This in Chinese is called 烂尾楼. So this 烂尾楼 situation has really spread around all across China. And the thing about this is developers can't finish the project due to lack of materials cost, but the buyer of the home, those who took up mortgage, still need to service their mortgage, and this creates a very strong discrepancy on that. So this is one of the things that I will be watching out, that how is the government going to the outstanding margin debt increased tremendously since January until now. All right, you can have a very strong exponential upside to from the down from 1 trillion to now it's standing at 1.58 trillion in renminbi. All right, so if you look at the bottom chart, we saw the net change on this is on day 44, which is on the 21st of Feb. We saw some very strong surge of changes in sales. So all in all, I think that I'm quite worried about the situation in China itself on this. Okay, so GDP, I think consensus and analysts and economists expect the GDP to grow at 5.2%. This estimated, and I think based on these estimates, the Chinese government is going to set a higher target to reach to 6%. So remember that 6% economic growth was actually a bad growth back in 2014. Back in 2011, where the double-digit growth has been the miracle, they dubbed the Chinese miracle, where the Chinese economy grew at 11%. So right now, despite growing at a slower pace at 3%, I think now going to 5% is really more than is going close to a double jump on this. But are we going to see a very strong growth? I think we still need to take a step back on this. First thing first, why is this so? Because Xi has clamped down on the like this Alibaba. Tencent is because of its ban on gaming and some of the tech companies that have grown richer, and then they are going to clamp down on this to spread out the prosperity equality on this. So it sounds a bit like communism on this. So don't really feel much of the. I don't really think that how is this very common in this. And the clamping down on the social political structure in China has grew tighter. So Xi in the political front is trying to gather more power on this to consolidate and cement his power. The next thing on the side note, I think the diplomatic ties between the US will base on Taiwan itself. So regardless of Taiwanese government, whether it's Taiwan or it does, because I think the resolve for Xi to take back China by force has been growing. I may be wrong, but I can see some signs of growing tension, especially after the Russian-Ukraine incident going on this as well. Okay, so I'm going to go into the technical front on the Chinese market. So first up, we go and see, despite all those rhetoric that I mentioned, I'm slightly less, I'm a bit pessimistic on the Chinese market on the longer front. But in the midterm, I like to see one more upside to test. Like remember what I said, March is going to be a very strong and good month. So for the CSI 300, we saw the CSI 300 actually bottom out in November last year. All right, the Hang Seng also has bottomed out around the same time, and then we have seen the CSI 300 making headway up after V-shaped rebound on this on November 2022. So after that, we saw the rally, a higher high and high low, and officially on the first start of this year, 2023, it broke out off the stronger downtrend line on this on January 3. So first up, I think we saw a very strong climax rally all the way until February, and then we see some short-term correction on this on the whole month of February. So it forms kind of like a tight consolidation. First up, it is being supported at the 4030 support 1 level. The key crucial level, I think there's a lot of buying pressure at this level. And for the fact that it has a bullish engulfing candle 2 weeks ago. This was explained on the previous first session of the webinar, I think on the 9th of February as well. So in the end, it came down not very strong. It's just mainly a correction, and then it rebounded second time above the 63-day exponential moving average, and the 4030 psychology and support level on this. So if you look at the indicators, we saw a very strong bullish divergence of the stochastic. There's no oversold crossover, means that despite on this, we do not need the stochastic go into oversold territory to regain a bullish momentum. And at the same time, if you look at today, despite some sell down after a strong rally yesterday, breaking above the falling wedge, we saw a small bearish candle, bearish doji that closed up. But you can see that there's a very strong volume, means that there is some sort of like accumulation going on right now. So the volume is most likely the high rate volume is likely to due to profit taking, and not a very strong reversal. Normally, we need to see a very strong large candle to confirm that, hey, this is very strong selling part. This volume itself is much more like activity that people are profit taking. So tomorrow, I think we are likely to see 4050 being the intraday support to bring up the Chinese market itself on this. On the Hang Seng Index, so oversold condition has been confirmed. Unlike the CSI-300, there's no oversold signal on this. We saw the stochastic perform a crossover on this, and we saw that yesterday the rally actually surged 800 points, closing above the 20,000 psychological level again. But right now, I think we are the most dangerous part is the Hang Seng Index actually is trending within the in 20,500 to 20,800, this range. All right, so I'm a bit worried. Unconfirmed yet, but it's a bit worried. So unlike the CSI-300, I think the Hang Seng Index will go into a more prolonged correction and consolidation on this. Major rebound is likely to happen at 19,300, and depend on the degree of the rebound. I think if it's a very strong rebound gaining 600 points and above in a single day, then we are likely to see that 19,300 will likely go up to 22,400 on this. All right, another scenario is prices continue to edge up higher to 22,000 level before doing a one more wave down to test support 1 and 19,300 before carrying on the rally. But overall, regardless of it, regardless of the whatever scenario that's being panned out, the Hang Seng Index is likely to see a break above 22,400. Reason why is because I think if you can see that the circles are presented by chart, is the interest and the testing. So we have seen so much testing and interest and attempt to break above 22,400 line. But right now I think the 400 is likely to be weakened in this retrospect. All right. So it's likely to bring up further break to the upside again. So if it breaks, I think the next target will be looking at 24,000 and 23,500 in the near term after breaking in the near term. All right. Furthermore, I think there's this indicator I've been using. It's called directional movement index. Is to gauge the strength of the either trend. All right, it can be bearish, it can be bullish. The black line is the average directional index. So is to gauge is to see what's the average. So if it's trending up, means that the bear trend is if the DM minus highlighted rate is up above the ADX, means that is confirming that the bearish trend is up. And same thing for the bull. But one thing I always find is I use this as contrarian. So when if you see that when it peaks above certain time, like when for example in November when it peak when the DM minus peak above and then the DM plus was bottoming, we can see that there's adverse effect, and means that the trend is likely go the bearish trend has likely go into exhaustion on this as well. All right. So this is the thing that I would like to see further upside. All right, so for this HS, I think I very obviously you can't trade the index per se, but I think the most cheapest way to trade the index is through going to CFD. So and then just leverage products. Oh, very just need to manage risk, your stop loss and whatsoever. So because leverage can be a double-edged sword on this. All right, just a sideline on this. All right, so next one, I think the tech has been hammered long enough until recently it has a real break up above. So recently I also have issued a transporter report, our in-house technical report on this. I think yesterday it surged up to around 6% after some accumulation. So for the Hang Seng Tech Index, I think we saw some very strong support above 3886, and I think it's likely to continue to hold despite prices still despite the index still trending lower below all the three key moving averages. There's a possibility that that the HST Hang Seng Tech Index is likely to continue to rally up from. Why is this? So I think if you can look down on this on my bottom on November, it has this rolling bottom, and it actually is a 3/4 bottom low. All right, since its debut, I think it has been going downtrend. I think this 3/4 bottom is actually the phase on this as well. So we are likely to see a very strong upside, and with this the rolling bottom, I think we can see that this is actually a cup and handle kind of formation on this. So mid-term to longer term wise, we are likely to see a very strong break above the HST. All right. So back to Europe and UK. So I previously shared a stock 600 and the FTSE 100 index by the UK over the technical. So I'm going to show only today only on the stock 600 because then there's some issue getting the FTSE 100 data. I'm trying if during a live charting, I try to pull out the chart if possible. I don't know if the problem has been solved or not on this, but back to the Europe and UK. So the Eurozone and both the Eurozone and the UK saw some slight decline in the inflation, but the decline in inflation today is standing at 8.5%. The last time we shared was around like 9% on this, if I remember correctly. The key thing is not because there's decreasing demand in Europe, but fuel subsidies is likely to has been ongoing for the European Union. So prices have been ongoing on this, and prices have been heavily subsidized. But I think in March, I think we may see, if the fuel subsidies expires, then we might see a resurgence back up on this. Despite oil prices still has already collapsed, but we are likely to see a rebound on this. All right, so despite declining inflation, I think Christine Lagarde understands the situation well. All right, she says that she was still continuous rate hike with 0.5 basis point on this as well. And the Bank of England on the UK side sorry agreed to this as well. All right, but it's just that right now the key thing between UK and the European Union is the Brexit. So there's some PM Sunak already has a deal on the Northern Ireland issue. Details I won't go into much as well. All right. So for in the chart itself, you can see that the Europe and UK has some sort of like the rate hike continue to go higher. I think this 4%. Sorry for typo. And then ECB is to 3%. Yesterday up from 2.5%. Eurozone inflation just came out is at 8.5%. So you can see that there's a strong divergence on this. And so once the divergence reaches to an extreme end, I think then we are likely to see a very strong drop back to equilibrium. That's economics 101. So I won't go into that, but if you like to feel free to take a snapshot on this chart as well. If you like, I can send you right away, or just just take a snapshot on this while I'm talking on right now. Okay, so I move on. All right, so the next thing is the stock 600. All right, so for the stock 600, I think the last time was February the 9th. I mentioned that we are likely to break out the 4,463 resistance level, but we saw, despite a break, but we saw some weak momentum. So didn't anticipate it, but a break is still a break, and then as such, I think we are seeing some sort of like a retest of the inverted head and shoulder neckline resistance support at 447. So this level at 447 will likely be a very strong one. So for stock 600 is still like any other index, you can't trade on it, but you can still trade on the CFD on this. So later on, I think I will show you some how do we trade on this as well. All right, so we're coming to towards the end. So US, I think the job data hints of no easing, but I think closing at 6.5% year on, like the inflation closed on 6.5%, but core inflation is still remain very much very strongly. All right, so another thing that factor in for the US macro outlook is the jobs. Non-farm payroll play a very huge part in analyzing the sentiment in the market. So first thing, inflation is likely to be sticky, and the Feds will likely accelerate the pace of hike at 25 basis points. There are some consensus, I think, looking at recent federal different Fed banks chairman, president. They are that based on the sentiment, it's likely that if inflation persists, we are likely to return to 0.75%, 75 basis point hike on this. All right, so job market reality, I think right now is easier higher, but it's more of the service sector, the low paying job like McDonald's, Taco Bell. Okay, so I retract my word, not low levels, but mass retail kind of level. So it's like fast food, fast consuming goods on this, consumer staples, Walmart, all this, they are able to hire much more workers. Reason being, because I think if I show you this chart before, we are seeing some sort of like, despite low rate, we saw rising labor force participation rate. We see this strong increase, and then the rising job opening. So the job opening from 10 million, which back in 2021, is being pretty high as well. So right now the rising job opening is standing at 11 million. It's not seeing a drop. So first of all, I think there's a supply and demand mismatch on this. And secondly, I think I mentioned the past the previous webinar is the economy really good enough that the jobless rate is that low, or is because of people are meeting estimate one job is not enough, people are working 2 or 3 jobs. Means that I work in Burger King in the morning, I go to Starbucks in the afternoon, and at night I go to Walmart or Amazon logistics center to to work out to pay off my rent. So since that gasoline has been priced high, housing rent in US has been high as well, with the mortgage rate drop, with the mortgage rate increasing. So are we facing a lot default issue? And research has shown that most of the Americans, I think the default rate has gone up to 35% on this. So it's a kind of worrying factor right now. So yeah. This one I won't go through that much. 10-year Treasury yields actually hit 4% on rate expectation, and then despite job remain robust after aging fund on the non-farm payroll added on February. Sorry for a typo. So inflation is likely to be sticky, and we are likely to see the acceleration. So this is the latest update. We still see the M2 money being riding in. Whereas I think the reverse repo market means that the banks from the institution, they park it back to the Federal Reserve. So US 607 billion was cut overnight, was reported last week. So this is a huge increase. Previously in 2021 was 300 billion. So right now, that I think there's over excess of cash, and they do not know where to park the money. Either buying bonds, which is giving 4% return. The another way is to park it back to the repo market, for the Feds to earn some cash and then take it out the next morning. All right. So despite all this, I don't understand why the Federal Reserve is still releasing the M2 money, despite a surge in the reverse repo situation on this. So liquidity seems to return, but yeah, I think this is totally a disaster. It's currently a mismatch. So when there's a mismatch, something bound to happen in the market. All right. Just bear with me for a while. So the triple three corrective wave. Okay, so yeah, sorry. The triple corrective wave is this. So yes, we have completed this downside move, WXYZ, the triple three corrective wave. But right now we have on the wave front, and wave front, we have completed wave 5 of this going on after ending diagonal. So despite the impulse move since last year, very strong up moves, closing up to 35,000, and then after that a slam dunk on the downside again. So also the foreign broadening wedge, it just confirmed it, the upside. But how deep are we going? We may be going back to 31,000, 30,000 before sustaining a rally to the upside again. So how possibility, what's the reset? Even there's a recession breaking down, I think I'm looking at the next major support at 26,333. I saw some interesting figure from Bloomberg that pricing in the pop. So later I'm going to pull up the chart and show you guys. Meanwhile, consolidated view on the DJIA. This is the Dow futures. This currently the latest one before, I think that was like 6 p.m. When I did this slide. So we might be able to see the short-term rebound targeting 36,000 in the midterm. But right now, I think money to begin. I think we do have futures account on this. On our end. So I think futures, if you trade the E-minis, just moving at 10 or 50 pips, you will already earn 1,000. All right, so for this, I think we saw some weakness despite a rebound at 123.6 Fibonacci extension level of W and X wave. We are likely to see one more downside to 32,063, which is 161.8% of the Fibonacci extension level. Mind you, we are seeing some sort of like oversold. So any short-term rebound, I think we are expected coming near between 32063 to 32705 right now. All right, so I end off my session. So I know my presentation, not the session. So I'm just going to do stock pick and then just Q&A itself. So any question just right now, just type in the chat. think there's a question on what's the likelihood of recession. So let me just pull out the chart on this. Bloomberg. Hang on. Yeah, this is the one. Okay, so you can see my screen on this. Yep, this is the screen as well. So this is US probability recession based on the yield curve. So the 2-year 10-year spread. This is a very famous indicator. So it has been inverse quite a period of time. And based on this calculation, we are pricing we have seen an accelerated probability of the recession coming is at 71% on this so what's the likelihood of recession in US 2023? So there are two dates, there are two quarters that I would like to highlight. The highest possibility is going to happen in October. Reason why is because it coincidentally with the Lehman Brothers collapse in September. And next thing is September and October is a famous month, all right, for the triple witching period. What is the meaning of triple witching period? It means that the futures, options, and stocks especially the stocks reported a slightly not a better earnings result and June as well. But what to make things worse is when all the futures and options expire at the same time, there will be massive rebalancing, massive sell-off. So to excavate the sell-off, pricing in the negative sentiment, then we are seeing a very strong downside for this as well. All right, so this is probability of recession going forward. There is, but on the contrary, when people are thinking of like recession is coming, there's extreme pessimism. Then I think the recession might be a mild one, or it will not happen. But this is based on my conjunction. Nobody I would say nobody. Majority of the people in this world, they can't predict when exactly the recession is going to happen. All right. Okay, so yes, okay, so I'm going to share some charts. Hang on, so again, and I'm going to show this. Yeah, I got locked out again. So, some of the stock pick on Caterpillar. So Caterpillar, one of my colleagues covering US did a report on today on this. So both are very strong incline to the industrials right now. So first of all, Caterpillar, we saw some very strong uptrend and a falling wedge correction on down. One thing is if we're going to see the weekly chart on the Caterpillar, we still imagine this wave 4. We still have much more room to reach 268 to 301.5. So going to Caterpillar, I think we're going to see okay, so I'm going to do Baidu is one of them. I like to do, but Caterpillar the option chain, how much price low. Remember backhaul spread? Do you remember that that incident? So if we do a backhaul spread, what is it? Are we going to still, if you still remember, type in 1. So backhaul spread is simply will actually fall. So, but I think that short-term wise, I would think that the bullish call is likely to go on. So, but I think that hey, because of bearish gap here, huge supply is here. I think 262 is likely to be a very strong resistance level. So there will be come off like selling going on. So I can do a buy call, maybe a 3-month buy call over here. So you can see that April, okay, let's do a 1 month. So 100 shares, and then we can buy at what's the current price? 250. So we can buy a strike price of 250. All right, and then we just click this, and then you can just buy on vertical or single. The rest, I suggest you to read up because some of the iron butterfly straddle more of a ranging market. So I'm still figuring out how this works. All right, so you can buy on vertical, single, and then go on. And then after that, when you buy option, there's premium involved. So the thing is, I will do a sell call. So when as price open tonight, if it move higher, closing on to this, I'll do maybe a 1 week sell call on this to get back some premium. All right, and then hopefully it doesn't get exercised, and then I will earn the premium from the sell call itself, and then I will liquidate it before the expiry, 1 month expiry is up, to take back the what do you call it, the money. All right, so I will be earning both sides simply by the short-term directional movement. So this is the beauty of technical analysis. You know when to buy and sell on this as well. All right, so and then next one I want to share is Baidu. So I'm going to do the one on the Hong Kong one, and then it's going to be the same one. So for Baidu, recently what Baidu is so hot is because have you all used ChatGPT? If you have you've done, please type in one. I would like to know how much. I actually paid $20 for the $20 for ChatGPT because I think that is much more it's quite useful to use it. All right, ChatGPT. So any comments you like, they think that the ChatGPT it cannot make it is good, will ChatGPT overtake our job on this? Please type in the Q&A. We love to discuss on that. All right, I think we got some more time left. All right, so Baidu actually has created his own version of ChatGPT. Yesterday was a very strong surge breaking out of the falling wedge, cup and handle formation. And exactly, if we're going to plot down the chart, I think the trend line, I think we are actually seeing a very strong return of the uptrend again on this. All right, so then we are seeing some sort of like very strong rally. Despite it opening lower, some sort of inside bar, I think this is still very bullish, not bearish enough. And then we saw a strong support above the 21-day exponential moving average. 63 days exponential moving average is likely to cross over 252, and I think it's very much pretty strong signal. No need to say. And then we saw some strong rising volume on this as well. Stochastic saw oversold. I think we are likely to go up on the upside again. So so on the US front, the ADR, all right, the ADR is as well. So okay, yeah, guys, by the way, sorry, before I carry on, you guys can actually upvote the question you want, so I'll answer it. All right, so I will just see the popularity of it as well on this. All right, so for Baidu, yeah, I see a flag instead of a falling wedge. I think that if it's going up, but I think that near the high, same thing, I can just do option change BIDU, and see there's some shares, and then I think that Baidu will be on ChatGPT, or I will just buy a longer call period. All right, so why is because I only need to pay a premium for 100 shares. All right, but if you think that option is too complicated, you just have to go to CFD over here. It's like buying a stock, but it's with leverage. Of course, you need to buy with a stop loss. All right, so duration, all this, you can do it. All right, so both option and CFD are derivatives. So option is just that once you buy with the premium, that is your maximum amount you have to lose. CFD on the other hand, if you don't set the stop loss, you will get margin call. So you really need to be very wary on that. All right. So if you need more information, you can text us or text the ProsperUS team. They will explain to you in details. All right. So I've done my some of the stock pick itself. So looking at the first question, technical SG Bank. So SG banks, there's a lot of going on, like are we bottoming yet? Where are we seeing, how are we going to see the upside? So for the SG banks, actually, especially DBS, as the bearish engulfing candle on 13th of February, it came down despite good earnings. All right. So earning was good. You can see that good, and then but prices came down. Touches the uptrend line support, and then fill out the gap. So strong selling still continue occurring. You can see that the increase in the bearish volume is seen as well. So the next level of support I'm going to look is at $32.90, and the next between $32 to $31.80. So this may be the bottom. All right, quote unquote bottom. If we're going to see how is the bottoming effect, I think 1.226 and then 1.618. All right, this level. So this is the expansion level of this level. Okay, so but I think 1:1, this support level, this recent low, I think 32.90, worth looking out. I think that I would be wary of 31.80. If it breaks all the way, then 31.05 is likely to be gone, and then we are looking at $30.14 going forward on this. So we have not seen any new high. New high was seen last year, February 2022 on this. All right, so I think showing the more positive banks is UOB. UOB, I think didn't really form as much as what DBS showing. I think UOB, we can really look out for the bottom at $28.88 on this. All right, going forward, and then 29.38. So this is the corrective wave A, B, and we basically see. At most, we are going to see 28.34 on this going forward on for UOB. So UOB, I think, likely to be the next catalyst going up. All right, so next one will be OCBC will be the second best. DBS is more of the worst. So for OCBC, we have really reached my target price at $30.40. It has recently break below this support at $12.56. To be exact, $12.60. Not a very strong support, so likely going to see another support at this level, $12. All right, on this, so $12. Based on this, we can see that this the FIB levels 8%, 61.8. So it's confluence with this level over here. So $12.12. We are likely to see on a very strong upside. All right, I hope that answers your question on the regarding the bottoming of the SG banks. But judging from DBS, I think we are not looking at any time of the bottoming yet. All right, so yeah, okay, so Bank of America, BAC. Okay, so just allow me some time. I just need to go to the washroom. So first, just give me 3 minutes. All right, so I can take on more questions. All right, so sorry. Buddy, oh, sorry. Yeah. So back on BAC. I think BAC. I think the major buying support will be at 29.66 to $30.54. But if you like short term wise, I will be looking at $33.28. Looking at this, I think bottoming out. I think we are based on the Wyckoff theory. I think almost a three-quarter bottom accumulation, string test up. I think we are likely to see one more third wave up, but is going to be limited on this. So if the rebound successfully at $33.28, I think I will be looking at 37.49 on this. All right. All right. So I think the next question by Angela is on Intel. All right. So looking at Intel. Intel, I think the closure wasn't strong yesterday. It has really break this long time ago I did this. I think back in 2021. I think Intel consolidation. So I'll wait for more consolidation. It's likely going to be trending between this level to $27.89, maximum $30. So not advisable to trade for Intel for now. You can buy for bottoming, but bottoming always have this risk of breaking lower. All right, so this is the risk that we have. But I think I would like to see Citigroup. All right. Citigroup, why is because I think as higher high, high low, despite being traded lower, but we do see some very good reversal signal, inverted head and shoulder. At the same time, prices do still remain above this resistance and support at $50.26. Yesterday, a strong bullish closure above the 22 and 252 exponential moving average indicate that we might be seeing some short-term upside, perhaps to $56 and then towards $63 and 15 cents. All right, so this is the thing that I'm looking out for. Plus, I think the directional movement index, we saw some strong upside on this DM plus. All right, so next one, I think REITs, Singapore REITs in 2023. I think REITs has really been priced in. First up, I think I'm going to look at the one of the best will be Ascender Street. I think it has really reached a top $3, and then it came down, finding support, consolidation. Despite very strong volume today, but we see this when I see this gap, this kind of spread of the candle, it's not likely to be performing well. So comparing to if you look at the STI constituents, looking at the REITs, looking at the banks, I think banks have not reached a bottom, and then the REITs are overbought at the same time. So likely we are going to see some more consolidation and sideways. It's not going to move much, but I think we can still keep on to look out. All right, so I join back every 2 weeks, so I'll provide a timely update on the REITs as well. So another REIT that I wish to touch on will be on Scott. So if you see Scott has already performed a bearish crossover after rising up so much to 1.14, coming down on this. So REITs definitely not a right time to buy, but if you talk about this, I think below $1 is likely to be undervalued for capital cap-led Scott, and then you can just buy back on the rebound. All right, so I hope that answered your question. So before I end, I just want to see whether do you all still have any more Q&A. If not, I'll just end our session, but just give maybe a 5-minute more, 1 to 2 minutes. Any question, I'll just answer before I end. All right, any questions on the option strategies and stuff like this, on the macro environment you like to see view, or you have any view you like to say, please put it up. All right. Okay. There's nothing. I think I'll pass. Wait, how about industrial REIT? Okay. So and industrial REIT like Maple Street Industrial. also see a very strong downside this morning. All right. So I think industrials, I think I will be looking at, I'm more between Maple Tree Industrial. I prefer Fraser Lock. All right. Still sustaining, not much movement. I think that you can aim for a short term upside of $1.32. So industrial REIT, I think one thing is the logistic, because they have a logistic front. So just based on technical outlook, right? We are trending above the 22 days and 33 days. All right. So industrial REITs neutral, but I would say that generally the whole REITs market are still onto the downside. All right. So hope that answers your question, Angela. Okay, that's my question. I'll pass my reply to Rui Hong to do a summary and closing. Rui Hong, to you. Thank you.
Thanks, Sharon, for the sharing. Okay, guys, before you leave, it is okay for to just spare us a few minutes just to complete a feedback survey. Just can scan the QR code that you see on the screen, or you can click on the URL that's on the checkbox as well. And hope that this session was a very insightful sharing. And we wish you a good night and thank you for joining our webinar once again. Yeah. I'll leave the screen on for a while so you can just take a QR code and do a survey.